Have you ever spent hours watching trading videos? You bought courses, copied profitable traders, back-tested strategies, and then, somehow, you still lose money? You watch someone else use the exact same strategy and make thousands of dollars while your account slowly bleeds away. And the worst part, you know exactly what you were supposed to do, but in the moment, you didn't do it. You moved your stop loss. You closed the trade too early. You revenge traded after a loss. You doubled your position because you felt confident. And suddenly a good strategy becomes a losing strategy. If that's ever happened to you, then this video might completely change the way you think about trading. Because today, we're going to talk about why trading psychology is more important than strategy. And honestly, most traders don't realize this until they've already lost a lot of money. Let's get into it. I know this sounds controversial, because every day on YouTube, Instagram, TikTok, and Telegram, someone is telling you that they've discovered the ultimate strategy, the secret indicator, the perfect setup, the hidden pattern, the strategy that wins 90% of the time. But here's the thing. If strategy was the most important factor in trading success, then every trader using the same strategy should get the same results. But they don't, not even close. In fact, a study published by Dalbar found that the average investor consistently underperforms the investments they own because of poor decision-making and emotional behavior. Think about that for a second. People are losing money not because they picked bad investments. They're losing money because they make bad decisions. And trading is even more emotional than investing. That's why today we're going to break down what actually separates profitable traders from everyone else. And spoiler alert, it's usually not strategy. Here's what most people don't realize. Most trading strategies actually work. Not all of them, but many of them. The problem is that traders don't follow them consistently. Let me give you an example. Imagine two traders. Both have a strategy with a 50% win rate. Nothing fancy, just a simple risk-to-reward ratio of 1 to 2. They risk $100 to make $200. Out of every 10 trades, 5 losses equals $500, and 5 wins equals $1,000. Profit, $500. Simple. Mathematically profitable. Now here's what happens in real life. Trader number 1 follows the plan. Trader number 2 starts making emotional decisions. He takes profits early. He moves stop losses. He skips winning trades. He revenge trades after losses. Suddenly, his average winner drops from $200 to $120. His average loser increases from $100 to $150. Same strategy, completely different result. And that's why psychology matters. Because psychology determines whether you actually execute your strategy. Think about a casino. Casinos don't care if they lose money today, or tomorrow, or next week. They know their edge works over thousands of outcomes. Imagine if a casino owner walked into the building after 3 people won jackpots and said, "You know what? Shut everything down. The strategy isn't working." That would sound ridiculous. Yet traders do this every day. 3 losses in a row. Panic. 5 losses in a row. Switch strategies. 2 weeks of drawdown. Buy another course. Start over. They're constantly abandoning statistically profitable systems because their emotions can't handle short-term uncertainty. And this is where it gets really interesting. The biggest enemy in trading isn't the market. It's your brain. Your brain was never designed for trading. Human beings evolved to survive, not trade. Your brain is constantly looking for safety, comfort, certainty. But trading offers none of those things. Every trade contains uncertainty. And uncertainty triggers fear. This creates psychological biases that destroy performance. Let's talk about three of the biggest ones. Loss aversion. Research by Nobel Prize-winning psychologist Daniel Kahneman found that people feel losses approximately twice as strongly as equivalent gains. Losing $100 feels worse than gaining $100 feels good. That's why traders hold losing trades too long. They're trying to avoid the emotional pain of being wrong. Meanwhile, they close winning trades too quickly because they're afraid profits might disappear. The result? Small wins, huge losses, a disaster. Now let us look at a story that changed my perspective. I once heard about a trader who spent nearly 3 years searching for the perfect strategy. Every month he changed systems. Every month he bought another course. Every month he blamed the strategy. Eventually he started journaling every trade. And what he discovered shocked him. Almost every loss came from breaking his own rules. Not the market, not the strategy. Him. He was entering too early, exiting too early, increasing risk after losses, reducing risk after wins. The strategy wasn't failing. His psychology was. Once he focused on discipline instead of strategy, everything changed. Within a year, he became consistently profitable. Not because he found a better system, because he became a better trader. Here is why professional traders think differently. Professional traders don't focus on individual trades. They focus on processes. Amateurs ask, will this trade win? Professionals ask, did I execute correctly? That's a huge difference, because you can execute perfectly and still lose, and you can execute terribly and still win. One result is skill, the other is luck. Professionals understand that success comes from consistently making good decisions, not predicting the future. Now, before we continue, if you're serious about improving as a trader, I want to invite you to join my Telegram community. This is where I share market updates before they appear anywhere else. I also want to begin helping people connect their trading account to mine via copy trading. The reality is that markets move fast, and sometimes the difference between catching an opportunity and missing it comes down to getting information early. That is why I decided to launch my copy trading, so that as I place a trade, it reflects immediately. And this will help undisciplined trader to become disciplined by watching how we professionals do it. So if you want direct access to my latest updates, signals, trading deals, and market insights, check out the Telegram link in the description and join the community. Now let's continue, because this next section might be the most important part of the entire video. Here is the real secret nobody wants to hear. I know you are probably wondering, if psychology is so important, how do I actually improve it? Here's the answer nobody likes. You improve psychology the same way athletes improve performance. Practice. Deliberate practice. Repetition. Systems. There isn't a shortcut. There isn't a magic mindset hack. There isn't a secret indicator for emotional control. You build emotional control by repeatedly following your rules. Especially when it's uncomfortable. Think of it like going to the gym. Nobody gets stronger by watching workout videos. You get stronger by lifting weights. Similarly, nobody becomes disciplined by watching motivational content. You become disciplined by practicing discipline. Here are 5 practical steps you can apply today. Step 1. Reduce position size and stick to a fixed risk. Most psychological problems come from risking too much money. If losing one trade ruins your day, you're trading too large. Simple. Reduce your position size until losses feel manageable. Step 2. Create a trading checklist. Pilots use checklists. Surgeons use checklists. Professional traders should too. Before every trade, ask, does this setup meet my rules? Is risk defined? Is reward acceptable? Am I trading emotionally? If the answer is no, don't take the trade. Step 3. Journal everything, not just entries and exits. Track emotions, track thoughts, track mistakes. Patterns will appear, and those patterns are valuable. Step 4. Think in probabilities. Every trade is one event in a larger series. Stop treating every trade like it determines your future, because it doesn't. Step 5. Focus on execution. At the end of each day, ask, did I follow my process? Not, did I make money? Because good process eventually creates good results. This is where it gets really interesting. Many traders think confidence comes from winning, but that's actually backwards. Real confidence comes from discipline. When you know you'll follow your plan regardless of the outcome, fear starts disappearing because you're no longer dependent on any single trade. You're dependent on your process, and that's powerful. The market becomes less emotional. Losses become easier to handle. Winning becomes more sustainable. And suddenly, trading feels completely different. Look, the truth is that strategy matters. Of course it does. You need an edge. You need a system. You need a framework. But after a certain point, psychology becomes the multiplier. A great strategy with poor psychology produces poor results. An average strategy with exceptional psychology can produce excellent results. That's why some traders keep searching for better strategies for years without success. They're trying to solve a psychological problem with a technical solution, and it doesn't work. The next time you're tempted to buy another indicator, ask yourself, do I really need a better strategy, or do I need better discipline? Because that question alone might save you months or even years of frustration. And remember, the market isn't testing your strategy nearly as much as it's testing your ability to stick to it. Master your emotions, master your decisions, master your process, and the results will eventually follow. If you enjoyed this video, make sure to hit the subscribe button and turn on notifications. Also, don't forget to join my Telegram community using the link in the description if you want market updates, trading signals, exclusive trading opportunities, and direct access to the latest information I share with my audience. Thank you so much for watching, and I'll see you in the next video.